Welcome, everybody, to the session for today. I hope you're well. I hope you've had a good Wednesday so far. Fantastic to see you all here, as always, of course. And thank you very much for popping into this new version of Inner Circle, where we are live on YouTube. And need to get everything set up there. Okay. Good evening, Wayne. Thank you very much for popping in. I hope you can see the screen there. Okay. Obviously, we're going to talk about mastering a trend continuation strategy. For those of you who are new to Inner Circle, what we do every week is start by just talking a little bit about markets and what they're doing right now, and then, of course, we can delve deeper into the educational content. So, uh, as I said, thank you very much for popping in today. I hope you're good. Hi, Roger. G'day. Pauline as well. Thank you very much to you all. I am going to put up a little important message just to get things started. Just to remind you that this is for educational purposes only, and hence do your own due diligence on anything you see here, particularly as we're looking at live markets. And of course, make sure you manage risk on every trading action. That's entry and exit consistent with your own personal trading objectives and financial situation. So that important message being said, let's start by just looking at a few of the drivers that are dictating market action right now. And there's four key things we're going to talk about here. Obviously, we are testing market highs. We saw that earlier in the week. We had a little pullback last night, but we'll check that out in a moment, of course. We've got some important dates coming up in terms of tariffs, etc. We've got the first round of tariffs, which were then paused for 90 days, which include Europe and Canada, which Trump have got in the crosshairs on both counts. And of course, another month down the line, we'll have the China tariff decision made. Now, of course, markets are a little mixed in terms of what might happen here. Recent trade announcements have been met with almost a whatever sort of attitude by markets, as you can see from the fact that we're at market highs. The other thing, and we'll have a look at a chart in a moment, is the demise of the US dollar. We are seeing that through 3-year lows and at levels not seen since February 2022, which is quite staggering. We have got a shortened week, of course, this week because it is the 4th of July, but we still have some big data coming out. The non-farm payrolls coming out on Thursday rather than its usual Friday. That's, of course, for those of you less familiar, the monthly US jobs report, which is of vital importance not only to give us a gauge of where the US is sitting overall economically, but also, of course, it may influence the Fed decision, who at this stage, it looks like a September rate cut is in market thinking. Very, very unlikely, despite the JD Vance and Donald Trump both having a pop at various times during the last few weeks that the Fed should indeed cut rates. I don't think Jerome Powell is likely to play that game at all. And then, of course, we've got Donald Trump's oh so big, beautiful bill, which passed through the Senate last night on the back of it was 50-50. And then, of course, the vice president has the casting vote. In such situations, of course, JD Vance is going to vote to push it through. So the latest version of that is going to go back to the House for debate and possibly approval. And of course, that's created yet more debate between Elon Musk and Donald Trump, which remains a constant source of amusement to everybody. So that's really what the market drivers are now. So watch the data, watch whether we may have hit market highs for now and maybe I'll pull back. Watch for those any tariff news coming out. That 90 days is up on Monday. And of course, watch the big data. And it's a long weekend on Friday, so there may be some strange market movements going on at the back end of the week. Let's just have a look at some charts right now. I'm just going to flop this on here. There you go. You should see a chart coming up um, with my head somewhere amongst the navigation. And let me just do this just to get onto charts itself so I can see it better. This is the Nasdaq daily, and you can see there was February's highs that we breached, and we had that little pullback last night. You can see there we've got that slightly tepid day today. Hasn't really known what to do with itself. We had a little pickup at the back of the Asian session, and of course we dropped off a little since European session opened. We'll have a look at some data around that, but that's those market highs we're talking about. This is a 30-minute chart, of course, just to give you context in terms of what's happened today. But this is the important chart, really, in terms of where we are for right now. If we just quickly flick to um, if we just quickly flick to show you what happened last night, I'm just negotiating all the controls here. There we go. So that's what happened last night in the US. So you can see the Dow and the Russell were both high. We had a little bit of a pullback in the Nasdaq, which has been on a tear of late. Likewise with the S&P 500. If we just pop in to have a look at where the futures are at right now, you should be able to see there that the US futures are slightly to the upside. Buying coming into oil, gold's pretty flat. Copper's doing very well again. And you can see here that in the FX world, the yen and the GB pound are both looking interesting. Why isn't that switched over? Right, okay, let's just pop to see. There we go. So it's a little bit delayed there, but you can see there. You can see there that those futures are to the upside. European markets looking good. Gold flat, copper up, and the yen looking weak. We'll have a check out on some yen crosses in a moment. Just let's quickly check out CNBC, which should flick over any second now. Okay, so it's a little bit of a lag it's shown on YouTube, but we can see there that the European markets are up. The DAX, the FTSE, and the CAC Current all up. The Current is doing very well. It's around about 1.2% to the upside. So that's where it's all at this stage. And in terms of where Asia finished today, then we had Singapore markets hitting record highs, a weakness in the Nikkei, in the Shanghai index, positivity in the ASX, good session for the ASX, up 0.2%, and likewise with the Hang Seng. So that's where all of that is at. Okay, so let's just pop back to some charts and check out what is going on. You should see the charts come back any minute now. Is there any delay on what you're seeing and what you're hearing? Just let me know either way. Right, okay, cool. Let's look at, we talked about the US dollar demise, and there you can see it in all its glory, really since early part of the year. If we just take that back, you can see there that we've been in a little bit of distress ever since the beginning of the year, really. And as I said, this is 3-year lows that we can see here, and we're pushed beneath that. A little bit of buying coming in today, but really that's nothing to shout about. That's really on the back of yen weakness rather than USD strength, particularly. So you would expect gold to be flying, right? But no, gold hasn't been flying, but you can see it's having a good day at the office today. This 3350 level is really important. Let's just have a look at a shorter term chart. And you can see really we've been in a tight trading range since the early part of the US session yesterday. So watch for this 3350. I like this a lot. It's going to be difficult to beat this as a chart of the day. Should we breach that? There's record highs up at 3354 in terms of the 30-minute chart. That would obviously beat these intraday highs that we hit a couple of weeks ago on gold. So money's coming back into gold Also, copper is looking really interesting here too. We're getting, that's good to hear. Thank you guys for that feedback. Um, there is a delay in terms of what I'm seeing on YouTube and what I'm talking and saying. It's a little disconcerting, but that's good to know. You can see here, copper is has been on a fairly significant run ever since the early part of June to come up and test this important level around about 515. These are record highs that we're seeing back in March. So a breach of 515 would create a high probability potential trade to the upside. We did have a little crack at it yesterday. You can see there before creating an intraday double top and pulling back into that range. So difficult to call right now in terms of where you would actually enter this trade, but possibly a move above 516 would be the price point to have a look at in terms of a potential long entry. Bitcoin's been interesting. You can see on the 4 hourly chart, really nice bounce off the 200 MA. This is the key level here, around about 10.8, sorry, around about 108,860. Looking on the daily chart, you can see the importance of this level. It's rejected this a few times, but we need to breach this higher. Uh, we need to breach this high level here at that 860 level to produce a higher high. If we do breach that, then of course there's those record highs back in May. So Bitcoin and gold both looking a little perky today, in the technical term. So of those, really copper and gold are the standouts. Really, the rest have got a little bit of work to do before they look sort of interesting. Let's quickly check out some FX crosses. I mentioned the USD versus the yen today. You can see that move to the upside with that yen weakness apparent. And level that I put on the chart, I think that was enthusiastic. Maybe at that 144.14, which it's stuck at now. You can see the previous price action there looks sort of interesting around that level. If you just stick on a 4 hourly chart, you'll see that breach of 144 looked important, but we need that 144.15 to create a good trading opportunity. But that's certainly worthwhile keeping on your radar. If we just check out the 30-minute chart, you can see we have had a couple of failed attempts at that. Look at the Euro USD. There is a potential short setting up here, which looks like a head and shoulders pattern, which I thought was interesting on the hourly chart. 117.65 is the level, but I'm not sure there's more than about 30 pips in this before it gets stuck in here. Some strength in the Canadian dollar today, which has sort of been interesting. Here's the GB pound Canadian dollar as an example. You can just see a little bit of profit taking going on after that bounce to the downside. Let's just look at it. Let's look at a couple of crosses and just see. Look at Aussie Canadian dollar. Again, similar sort of pattern. Strength in the Canadian dollar, but over the last couple of hours, we've just had a bit of buying coming back in. I might even check in on the Canadian dollar yen on the hourly chart. It looks as though there could be a key level here, around about 105.70. If you breach that, then most possibly there's maybe a 25 pip move to the upside. None of that's really exciting me, to be honest, in terms of a clear trading opportunity. So you may have to be patient until later. But the US yen looks like a good place to have a look at as we move forward. So in terms of the charts of the day, um, let's just have a look at a couple of US stocks. The Nvidia's pulled back. I think this is just a little bit of profit taken on this move that's been in place. Just watch for a move over 160 with Nvidia. On the ASX, I'm liking 360 ASX above a move of above a 33.50 price point. Carnival is going to be my US chart of the day, though. We reached this key level at 28.50 yesterday. Its cruise liner company is cruising above that resistance fairly smoothly after what's been a very positive week. So that's going to be my US chart of the day. And I'll stick with I'll stick with 360 ASX for a move over 33.50 for my ASX chart. So there you go. That's my market wrap. Some things to have a look at. We'll check in on those as we go forward. Thank you very much. By the way, guys, don't forget to make sure you've switched on notifications if you haven't done that already. And of course, if you like the video, that would be fantastic. If you just click that little thumbs up button, it'll keep the bosses happy. Okay. Anyway, let's get into the presentation for the day. I'm just going to pop you on here. There we go. So what we're talking about today is, let me just reposition myself. There we go. We're talking about trend continuation, and it makes sense to start with what do we mean by that. If you haven't said hello, say hello in the live chat. It's always good to know that I'm speaking to real people and not robots. Thank you for all of you that's done that so far. It's been fantastic. So what do we mean by trend continuation? Well, a trend is really a series of higher highs, lower lows. Sorry, higher highs or higher lows, or vice versa for sure. We've talked about this before. I just quickly flick back onto a chart just to show you ultra quickly. Let's find a suitable chart to show you this on. So if we look at this trend here, what we're looking for is there was our low bounce. And of course, we got a higher high there. And we're getting another higher high there. You can see the higher low and the higher low. It's reversed for a short trade. So if we look at the, let's look at the Euro US. So you can see here, there is our previous low. We had a little retracement going on there. So there's our next lower low. There's our next lower low, and we've hit one there. Looks as though we might be bouncing off this and create a new high again. So it may be saying that this trend is over. But in simple terms, that's what a trend is. Now, of course, you can use some indicators to help smooth that out. We can use a moving average like we have done there, which is a simple 20 moving average, just to help us make sense of it at a glance. But that's really what a trend is. So a trend continuation is when we have something like this that creates a swing low and then breaches that and continues in that direction. So it takes the lower low in the case of a short trade and says, right, if we break through, it means the market sentiment has changed. We want to continue in that direction. That retracement that we saw there could have been profit taking. It could have been market uncertainty here. You can see a wick rejection there. So that's really what we're talking about. We're talking about taking this opportunity here. You can see here that we've got essentially a sideways trend going on between this point and this point here. And so we've got confirmation of a breach of that. Now, there's various ways we can help ourselves get a little more scientific about that and create some key price levels. But we'll talk about those in a moment. So if we go back to the actual, there we go. So it's that market's compelled to take the price beyond previous price action. Remember, previous price action always influences current price action because the market uses that as landmarks. We're going to focus on entry today, although I will reference exit before the end, but maybe I'll talk about exit generally next week when we get together. So entry for this is usually, as I suggested, a break of a previous swing high or swing low, depending on which direction we're trading. Break of a minor structure within a pullback. So it might be that we take a longer term view of this and trade the shorter time frames. I'll show you that as well as we move through the presentation today. Close beyond a resistance zone or boundary pattern, as it's so called. But as I said, today we're going to focus on entry as standard interventions are worthwhile. And a move back below the identified price point would be a worthy exit as well. So standard exit interventions and a move back below the identified price point of the 2 points of exit. So that being said, there are three methods. I did ask the question just then, how can we identify that a potential trend continuation is in play? Well, we can use just the candle price action that we see on a chart, but should we want to get, as I said, a little more objective about it, or a little, or if we want to be able to program this and create an EA, then we need to have things that help us out in terms of identifying what's a uh, meaningful price point and what's just noise. So there's three things we're going to look at. We're going to look at zigzag, fractals, and simple swing highs or lows. All of these you can easily put onto an MT5 chart, and all of these have strengths and all of these have weaknesses. So we're going to compare those in a moment. So I'm just going to flick back again to some charts. There we go. So let's have a look at another asset class. Let's have a look at. What should we have a look at? Um, let's have a look at the Nasdaq on an hourly chart. So as I said, there are um, three key three key ways we can do this. So when we talk about a swing high, we're talking. There's a swing high there, so it's the highest in X number of bars backwards, usually preceded by um, X number of bars before it and X number of bars after it, but it's always the peak. The bar has got to reach a peak somewhere within that, whether it's the wick or whether it's the body, is really not very relevant. But generally speaking, a swing high is classed as it would be the top of that wick at 22,719. And consequently, of course, we've got a swing low here at 22,395. You can see that happened in the US session last night before we subsequently bounced. So these are essentially turn points, and a simple swing high or swing low is what we look for, and then a move in the opposite direction. So that's obviously one way to do it, and the difficulty is this a meaningful move or not a meaningful move? And of course, there's little swing highs and swing lows within this move to the downside. We could say, well, look, is that a swing low? It swung down there, but and had a positive candle there. But is that a swing low, or is that just market noise as it moves in a particular direction? And it goes back, of course, to trend again. So there's a few things we can use. Um, just give me a moment. This is the zigzag indicator, so we're going to pop this on here. Going to try and make it a little obvious. And what this does is it takes out some of the noise. Depends on the setting you use here. Um, the X depth. So go into inputs if you're going to use this. Red usually isn't a very good color to see on black, so we're going to make it yellow and we're going to make the line a bit thicker. But you can see here what it does is create some really nice, almost noise-free tops and bottoms of where the market turned. So let's use this as an example. So if we were trading a trend continuation based on a zigzag high, then we could sort of say, right, okay, we're waiting for this to be breached. And at this level, we would say, yep, tick. And then we would look for other factors that may substantiate this. So where it closed in relation to the range of the bar. So this closed probably about 60% of the bar from top to bottom. And you can see there is increased volume there. So that would be another thing that might offer us some confidence that this was a move. We had a retracement there and then a follow through again. So that would be a very good entry. And look, you can see how well it moved up. Would this have been a good entry? Well, it looks like it. We got this. We've got another essentially 104 points on this trade. I would potentially not enter to this bar until because that's pretty well on point where that was. We wouldn't enter on this bar because its close was beneath that previous um, the previous zigzag high. But then if we look at the other direction, of course, we saw it create a lower point. Now, that would be a tough candle to get in on, but it's done what we said. It's reached the previous swing or zigzag low. So that potentially is an entry there. There are reasons why you wouldn't take that trade, which I'll go into in a moment, potentially. But that's the basic. That's the basic setup. If we were to look at the Canadian dollar yen, for example, you can see if we take the latest swing low, then we could have entered on this candle here and taken advantage of that move to the downside, which would have been about 30 pips there. Now, one thing you'll notice is that the zigzag hasn't caught up. If we put it on a 15-minute chart, it's not quite caught up with it yet. So this is not something you would use for, say, a bounce strategy or for a reversal strategy. But because these zigzags are formed previously, again, you can see here the potential opportunity. There's the previous zigzag high. There's the breach of that on higher volume. You can see the volume rising there, closes in the top, almost at the top of the candle there. So there will be a potential move to the upside. And then, of course, it's all about exits after that. So that's zigzags for you. Now let's compare that potentially with another. So we've covered swing highs and swing lows. So let's just show you something here. You can see there that would be a swing high potentially, and you could get caught on this. And what the zigzag has done is it's taken this away. It's perceived as being too noisy here. So if we're sticking to that zigzag, whose function it is to take out the noise, then we wouldn't be tempted to get into this as a downside, as a short trade on the back of this candle here. Despite the higher volume, despite the fact that it's closed beneath the low of the previous candle, and despite the fact we've got a swing high. So swing high is easy. Zigzag is possibly next level because it takes out the noise. And then there's what we call fractals. And of course, all of this is dependent on what happens. Let's go on another chart. Let's do gold for something to have another look at. Here's the zigzag again. You can see it's on here already. So you can see here, if we entered this point, we would have potentially picked up around about $20 on that trade. Now we're looking for a breach of that swing high at, guess where, 33.50, which we talked about before. That's potentially good to go. Now, what I'm going to do is I'm just going to put this on a simple template, and I'm going to load your fractals. There we go. Either way, you can see this zigzag here would have been a fantastic trade. Right. Anyway, let's put fractals on. Fractals were developed by a guy called Bill Williams. And I'm going to put this on here like so. The only issue with fractals is you can see there's nothing to amend. Okay, so fractals is a set point. And if we put them on here, let's bring it up so you can see it a bit more clearly. I should have possibly done that a different color so you can see it a bit better. Let's make that yellow again, possibly. It's good to see. There we go. So you can see it's created a fractal high here and a fractal low here. Now, what creates a fractal? A fractal is created by essentially a swing low, but it has the last two are above it, and the next two are above it as well. So it's a swing low with two up and two down either side. The fractal won't be formed until the end of that second. So that fractal would have formed on this candle here. But what you can see here is, although there's some great potential moves here, if you were trading a breach of a fractal high, for example, you could have got into that trade there. So you could have said, right, that's the previous fractal high, exactly the same concept as the zigzag, and taken advantage of that move there. If, however, we trade the zigzag, or if let's put a zigzag on normal settings. Of course, you can change the settings on this, which is a big plus. You can see we would have actually been in here, not here. And there's best part of $18 difference between those two entry points. The other thing you'll see with fractals that zigzags take out is the number of times we see this sort of noise. So you could be whipped in and out of this if you're using fractals as they are currently. Now, there's ways you can create a fractal. You can go in, and you guys who are doing the EA courses, why don't one of you go in and create a fractal with the nice little arrows where the inputs are adjustable. So it's not the standard 2 up, 2 down. It might be that 3 up, 3 down is better. It might be that 4 up, 4 down is better and takes out a lot of the noise. It would certainly take out this fractal, for example. And if you were trading the trend continuation on the basis of this fractal, you might well enter on this one here. Whereas you wouldn't again with zigzag. You probably wouldn't with a swing high, because usually with a swing high you do 3 and 3. But you can see there, I don't like this at all because there's no confirmation to the upside. There's just two bars here that are higher than that point there. So I don't like the fractal setup, though some people swear by it and do very well out of using fractals. Feel free at any stage to make comments or put questions the into the chat, of course. So those are the three key methods that we can sort of use. And so if we go back to our slide there, so the strength of the zigzag is its smooth noise. It's easier to see structurally on a chart. Fractals is an objective measure. It's built into MT5. That's easy. And swing high and low, which can be manual or scripted in code, they're all good for discretionary traders, but is more flexible. So you can say, right, okay, as part of my plan, it's only going to be a trend continuation if there is a minimum of I'm only going to class it as a swing high, for example, or a swing low if there's a minimum of 3 bars either side. The weaknesses, the zigzag is lagging. Okay, so you saw there when I showed the charts that there's maybe 2 or 3 bars currently that it's not drawn yet. It's not painted it on yet, and that's just because of the way the calculation's done in terms of making sure that it's taking out the noise. But it's not really a weakness for this strategy because we're looking at a previous zigzag high or zigzag low, depending on which direction. But maybe not suitable for a bounce or reversal. It helps us also in looking at what I call market structure, which is looking across multiple timeframes at what's happening. So you can quite easily get that higher time frame context. So again, if I just go back to a chart for a moment, I will get slicker at doing this chart movement. So we see this on a go chart. We can put another zigzag on this, make it even less. We can just alter the settings, alter the inputs, and maybe make this a 30 and take out even more noise. So you'll see there, we can put this in and we could sort of have as part of our strategy. Well, we wouldn't trade a break of that because it's not in that direction, if you know what I mean. So it may be that that's what you can do, or you have something. And again, those of you who were on the AI course yesterday, we created a multi time frame, if I can remember the right. What was the latest version? 2.5. So what this does, it'll There we go. So it's strong bullish on gold on a daily chart on a 4 hour. So what it does is it gives you confluence across many time frames. Now this is based on price versus a simple 20 EMA, but you could use the same concept with zigzags if you wanted to. Do you like that? I thought it was pretty cool. So you can see at a glance there of what it's doing. If we change the, there we go. So you can see here that our Canadian dollar Swissy on the daily chart is really quite bearish. It's also bearish on the 4 hourly. It's still quite a distance. Still hasn't crossed the shorter term MA, which is only 10. It's pretty neutral on the H1 and the 15. This updates every 3 seconds. So at this stage, it's sort of looking neutral. You probably wouldn't enter it until there's something better that says, if you look at your zigzags too, you would see that this is very much in to the downside. So you wouldn't be that interested in trading that long at this stage. Even if it showed on the 30-minute chart that it was looking a bit perky. Again, we'll get an update on this in about 3 seconds. There we go. It's still bearish if you look at all time frames, but as I said, that's a really simple price versus 20 MA. You could do the zigzags accordingly, but you can see here. Let's just close that down. If we put our zigzags back on it, it's interesting. It closed everything down. It's just removed everything from the indicators book. So I didn't realize it would do that, but that's actually quite cool. There's our zigzags again. So the other thing I would say is you can see here that we didn't actually get a close above that previous zigzag. So that's possibly worth doing. You'll often get it tested with wicks in per candle. That's well worth bearing in mind if you're creating a strategy around this. What are the MA values? On this chart, there's a 20 and a 10. We've been playing. Look, just standard settings, Roger. So when you open the zigzag, you'll see the inputs at the 12, 5, and 3. If you want to make it less noisy, increase that. If you want to make it more noisy, let's just do that. You'll see it does more zigs and zags. So you can see there's the yellow line, but more zigs and zags. So if you want something that's a little less conservative, perhaps you want a more aggressive approach. What you would do then is you would be in on this because it's breached this previous zigzag low. So you can also look at that. So what I would suggest with any indicator is always start with the default. Oh, sorry, the red line's at 200 MA. Always start with the default, and then you can play around with that. Obviously, the benefit of it being in within an EA is you can back test various settings against various instruments and see what works. So I hope that sort of makes sense in terms of one versus another. It's a really indicator, but it's a really easy indicator. But in terms of giving you a green light to take action, I think it's really quite useful. Here's a daily chart. You can see on the daily chart, it's a downtrend. So that may say, right, okay, even though it's potentially an uptrend on here, I'm going to wait until it's breached that 58, and that's where that's where this comes into play. So you might be happy to accept eventually when it pops up. But you can see here, if we get a change in this and it starts to breach this 58.16, then we might see the 15-minute and the H1. And you can alter these as well on this indicator. The 15-minute and the H1 start to look green. That's going to alter this. And so it may be if you're using something like this for discretionary trading, you may say, I want the time frame that I'm trading, my primary time frame, and the two above it to be so I want bullish, and maybe neutral at worst, and you're okay. So you're using essentially 3 time frames there. If you want to, that's why I made sure the percentages are on there so you could tell that. And these are slightly slightly bullish, as you can see. We do have a cross, an MA cross on the short term on the hourly Canadian Swissy, but it's not looking particularly compelling, is it? It sort of got stuck here around about 58.08. So anyway, let's go back to the Prezzo. So I hope that sort of clarified three potential methods. I thought I would pick three common ones that are relatively easy to use. I'm a great fan of of it being simple. And the simpler it is and the less ticks you've got to have to do. There's some weird and wonderful ways of picking up things like trend continuations and bounces and stuff. But if you can keep it simple, then that's not too bad. I think fractals maybe are a better way of picking up a bounce. You can see this microstructure recognition is maybe not a bad thing in terms of because it's going to pick up a bounce or a reversal pretty quickly. So it might be that a fractal is better for those type of strategies or as part of those type of strategies. Um, or maybe multiple fractals create a support level, for example, if they all fall within a certain short price point, maybe creating a liquidity zone there. Uh, anyway, I hope that's been useful just to talk you through those three and what the pluses and minuses of them are. I just remember that a break isn't enough. We get many false breakouts or fake outs. And there are a few things that really should be part of any system that you're going to develop around this. So it could be that I want a break of a previous zigzag high to go long, but if it's low volume, it's not a compelling move. If it's a low bar close, if it closes in the bottom half of the bar range, sorry, so that could be a rejection of that move. It might be that you wait for bar close rather than intra bar. We've seen many times. I'm sure you have too. That you see a key level on a chart. And we see we look historically and we can see the number of wick tests are quite significant where it's poked its head above, but there's not enough buyers there to take it through. We can have a look at things like momentum, have a look at histogram bars, have a look at on the MACD, for example, which is again for those of you less familiar with the MACD, it's simple. It's a simple distance between two MAs. If it's increasing, it suggests that momentum is there. If it's not increasing, then it suggests that momentum is shaky. As I said, confluence with higher time frames. If you've got a few zigzag highs at the same level or a few fractal highs at the same level, as I've already referenced, then perhaps that breach gives extra weight. If it's got supporting from either previous price action on the same time frame or higher time frame tick. And then, of course, you've got it's simply breaking into a previous. You'll hear me reference this a lot on the live updates, etc., where I'll talk about something just moving back into a range, so it could get a bit noisy there. And that's just all to do with the proximity of the next level above. Let me show you an example of that if I can find one. Again, we'll just flick on the charts. There we go. So let's pop our zigzags back on here and see if I can find an example. Let's make it quite bright. So it's quite noisy. Okay, if that's okay. Let's make it something like a 5. So let's say we've got quite an aggressive approach. If we look here, for example, Let's have a little drink. Here's an example. So if our strategy is, if it moves beneath the previous zigzag low, we're going to go short. So you can see here that this area here would have been our entry on just that. But what we've failed to notice by just having that as a line is that there was a zigzag low before that was here, and that's only 8 pips away. And indeed, it traded within that range after that breach for the best part of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 14 hours. Okay. So it really didn't do anything. In fact, a stop could have been triggered on the basis of this retracement to the upside. So the proximity of the next key level can be quite important. So you maybe have ATR on this is around about this stage was around about 10 pips. So if you had an ATR, if you said, well, the previous swing low, the previous zigzag low, the previous fractal has got to be, if that's less than one ATR, 1.5 ATR away from a potential entry, I'm not interested because that's a potential resistance becomes support, support becomes resistance. So that's a potential no on that. Let's look at another example. Let's see what it would have been up here. Let's do something different, so you know it's not me just handpicking these. So again, let's put this on. Let's make it quite noisy. There we go. So we look here. Let's just do that. So we look here at this and we sort of say, well, okay, previous or breach might have been there. Okay, so it may have been we got in this candle here. Now, in this case, we wouldn't get our candle entry until this one here, and this has actually breached the previous. So if we look for the next one, it's way up here, so that's okay. So we're rocking and rolling on that one. But if we look, let's say, let's find an example. Well, see, that's not bad. Okay, so again, looking that rule, it's got to be 1 ATR. So if we look at the previous, let's say we're going to go short. So we look at this. There is the previous zigzag low. So we can potentially go short on this candle here. But look here. Look at the proximity of that swing low. Way too close. So where that candle closed, it's one of the reasons why we like to trade on candle closes, is that is 13, that's about 0.6 ATR away. And what did it do at that level? Previous price action, breach price action. It bounced off that level and away it went again. However, with this one, there was plenty move to the plenty of option to the downside. It just retested that level before it came down again. So having some sort of proximity measure in there is good. You don't want it if there's a previous key level just below a short trade or just above a long trade, whatever strategy you're using, don't get into it. Wait until it's breached that key level. Program that into your strategies will serve you well in terms of creating something that's more likely to move up. Think about this. I often give this example. If you were looking at two charts, okay, irrespective of what the instrument is, and you had one chart showed a 20 pip move up to the next key level, and the other chart showed an 80 pip move up to the next level. So let's say the first chart where there's 20 pips is chart A, and the second chart where there's 80 pips is chart B. Which one would you want to enter? Which one would you be more compelled to enter? Chart A or chart B? Just type into the live chart whether you would go A for 20 pips or B for 80 pips? Which one would be more compelling to you? Play the game? Or have you all got shy? Mhm. Okay, so most people will go with the 80%, 80 pips. Okay, so chart B. Now, and that's because there's more in it. And if one person, if that's how you feel too, chances are that's how most market participants feel. So if there's a bigger move up, potentially based on previous price action, it's more likely to attract more people. More people means that move is more likely to happen. I hope that makes sense. So Roger said A is more likely. Of course, it's more likely, but is it more likely? Okay, is it more likely that if there's only 20 pips on offer in chart A and there's 80 pips in chart B, which is more likely to get up to 20 pips if it's got some enthusiastic buyers behind it because they see a potential for 80 pips, which is more likely to get up to 20 pips? It's chart B, isn't it? The more people you have interested in a trade, the more likely it is to gather momentum and to take it higher. Good participation, guys. Really appreciate it. Really appreciate it. Thank you very much for that. Right. Okay, let's get back to the pros. There we go. So consider that. So four key confluence filters to reduce false signals. First is proximity to the next key level. That's what um, we've been talking about. So your question you ask is, would the break run into trouble pretty quickly? Um, so just a break of a swing high, but there's only 5 pips to the next higher time frame supply zone where there's lots of people sitting there with sell limit orders. As I said, multi-time frame structural alignment. Look for higher time frame trends. You can use a simple moving average or that little tool that we developed if you're part of that group. So with MA agreement or recent support and resistance lines in the same direction is often better, or you want zigzags. You can either do it's the same concept as putting a longer MA on a chart. Um, in terms of if you standard MA on a chart is 20 and you put a 60, then that reflects what the longer term trend is doing. So you can do that if you prefer that to looking at longer time frames, but many would suggest that longer time frames, just because of the maths behind what creates these indicators, is a good thing to do. Look for price action confirmation. So things like looking for that candle structure, looking for maybe a space, which you can again use an ATR multiple. So you might say, I want half an ATR above that zigzag high, for example. And then look for volume and volatility spikes. As I said, any convincing move is usually associated with higher volume, but also arguably um, you may get ATR increasing. Um, you can have a look at simple relative volume or on balance volume are also things you can have a look at. Not so easy on MT5, but they're there if you need them to. But I would just go to start with, if you're putting a strategy together, just simply saying is volume greater than the previous bar is a good start, and perhaps is ATR greater than the previous bar as well. So now we're starting to put together a plan. We've got the zigzag, we've got the strategy in terms of a breach of that to the upside is a potential sign for a trend continuation. Or vice versa, of course, if it's short. Make sure that the next level where it might get stuck is not too close. We look for some sort of alignment with a bigger time frame. We look for good price action in the candles, including where it closes um, compared to the range of that candle, to suggest whether the bulls or the bears are in control of that candle, and volume and volatility to go with that associated move. And now you've got a trading plan, or at least the entry part. So, questions. Is the structure valid? Is the break clear? Not a wick or a marginal close. as in just a small close? Is there room to run before the next obstacle? Are higher time frames in support? Do you see momentum or commitment behind the break? That's in simple terms what we're doing here. And I hope all of that makes sense in terms of what we're trying to achieve. Just a word on exits. As I said, the next session is about turning a good entry into a great trade. But the reality is that, look, you know my feeling on exits. I think exits rule okay, but exits should complement entries, not fix poor ones. So it's really important that you get your entries spot on, create higher probability that it might move in your direction through not only a good structure that's clear and unambiguous, but also, of course, the discipline to follow through. Once you've got that, then, of course, we can start to look at good exits. Um, so we might look at take profits. We might look at a prior swing target. So we might look if that level is 80 pips above. So we might look before the when the last zigzag high was or zigzag low from a previous structure or resistance level to the upside. We might look at that again, a little space beneath it. We might take partial profits at key levels on the way up, or anytime there's a retracement candle, we might sort of say, right, we're just bringing our stuff up to that. We could look at momentum and do an exit on the loss of that. Or, of course, as I said right at the beginning, exit on failure of a trade idea. So there we go. As I said, we'll look at that in the next session. I'll keep it at a um, uh, fairly intermediate level to make sure that there's something. What I want to do with all of these sessions going forward, if you're new to watching me and haven't seen me before, etc., what I try to do is make sure that everybody walks away with something value. So I hope that's been the case for you tonight. Of course, your actions, take action from this. Don't just make it another session you rock up to and say, hey, yeah, that was cool. And away you go, doing nothing. Make sure that you consider what we've talked about today and make a choice about whether it could be something you need to work on, something to action. And of course, with what I've given you today, I hope I've given you the tools and the information to go away and potentially put together a trend continuation strategy that you can go and test on charts. And of course, test your usual exits, your trail stops, your take profits, your stop losses, etc. Um, I hope that's been useful. Look, feel free to ask any questions. I'm going to give a few minutes at the end of every session just to have a look in the live chat if there's anything there that's not clear or that you want clarity on, or just to make comment about what you've heard and whether it fits with what you're doing or what you want to do. So any of that is really appreciated. And if that's been good for you, then as I said, don't forget to just click that little like button. You'll find it. You'll find it underneath the title. Thank you very much for everybody who's done that. If you haven't clicked on subscribe, then do that as well, because that will mean you get notifications through. I know many of you have done that already. And thank you very much for being here. It's always a pleasure and a privilege to serve. Thank you very much, David. You take care. And we'll see you all soon. Um, keep an eye out for tomorrow's live update, which will be at lunchtime tomorrow. There'll be a notification sent if you've got notifications switched on. Thank you to you both, Wayne and Sonia. Really appreciate it. You guys take care of yourself. Enjoy the rest of your night. Take care. Trade safe. We'll catch you again very, very soon. Bye bye for now.